Let's talk about this bond market volatility. You must be loving it.
Well, I mean, there's volatility that's good and there's volatility that's bad. I mean, there's a lot going on in the world right now that's having a major impact not only on bond prices, but on agricultural prices, precious metals, and everything else. But yes, the activity at CME, in the month of August, traditionally a very slow month, with Europe basically being on holiday, but we've been very active. We're sitting on 142 million open positions, Wilfred, and that represents close to $20 trillion of risk on the books at CME Group. So yes, and you look at where the 2 years versus the 10 years, week over week, the trade is up 13% in the 2 years, all the way up to 32% higher in the 10 years, just in volume week over week. So there's a lot of people trying to understand where these bond markets should be as it relates to tariffs, currencies, and everything else. So, and also when you look at the European debt, being at negative rates, people are converting euros into dollars and buying more of our debt. So it's something that continues to go on here, and we're helping manage that risk.
So, Terry, you've been through so many cycles. You've seen, rushes of bond buying before. How does this one feel to you, that this sort of wave of money that's going into bonds, just when we thought, I don't know, a few months ago that the great bond bull market was over, right? This time for real.
Yeah, for sure. No, you're right, Sarah. That's a great point. But when you see three central banks from around the world, between New Zealand, Thailand, and one other, cut their rates all at the same day, people get concerned, and there's always a flight to quality. And U.S. has been a flight to quality for our debt, and we're seeing participants come in here kind of like I've never seen before, especially this time of year. So it's a pretty interesting phenomenon that we're seeing going on, and I think it's reflective in our numbers that people are managing that risk. So whether the great bull market in bonds is gone or not, I'm not quite sure, Sarah, but it certainly is active.
Terry, you mentioned the slew of negative rates on offer around other parts of the developed world. Is it plausible in your eyes that the U.S. could go negative too some point in the next year?
Wow. Wow, that's a question that's been bantered around, Wilf, as you know, for quite some time. I think it would take a lot more than just the German economy or the Japanese to be negative for the U.S. to get there. There's still a lot of other countries that are not negative yet. So I wouldn't see that in the cards in the near term. But you never know. I mean, I didn't think rates would be here. Sarah brought up a good point a minute ago. We thought the great bull market was over, and here it comes roaring back again in bonds. So it's hard to make a prediction like that.
I'm curious what you've seen in the agriculture pits, Terry, with China making the move to suspend ag purchases from the U.S., how active it's been and what kind of price action you've seen.
A lot of different fluctuations, Sarah. You're right. And again, I think when you look at the U.S. exports to China, in 2017 for farm products going there was about $20 billion of exports out of the U.S. to China. Last year was about $9 billion. And now with these recent announcements, I think people are very, very concerned in the farm community about, their future clients. I mean, there's nothing worse than uncertainty or the rules of the road, as you know, and especially for the farm community. So this is a very, very large issue. And I don't know if these interim bailouts by the government to offset some of these risks is good or bad. I think the farmers don't want the payouts from the government. They want to have certainty on trade. And so we're seeing a lot of people manage that risk in our agricultural markets in corn and soybeans. Now, soybeans, strangely enough, was down week over week, where corn was up in trade. So it's a bit of a phenomenon going on right now, Sarah. But yes, people need to manage this risk. In the farm community, after the weather that we've had in May and June, they're finally getting some crops in. And now there's a potential, you have the announcement coming out by the Chinese, they're going to halt all imports of U.S. ag products. That's just not good for the American producer.